Hello everyone and welcome to my YouTube channel brought to you by Mehmood's Investment Research in Ontario, Canada. My name is Mehmood Bakhsh and I head the Equity Research and Investment Strategy at Mehmood's Investments Inc. Today is Monday, October the 16th, and I'm here to share an exciting investment opportunity, a company that I think is well positioned to take advantage of the rising energy prices because of the geopolitical conflict that's going on in the Middle East. We have just concluded our research, and the company that I'm talking about is PetroChina, which I think is selling at a huge discount to its fair book value, even when estimated conservatively. And I'll show you that in a while. Now, I do understand that there might be some concerns from few investors, especially from the US, who might be skeptical about the country China when assessing its risk, mainly because of its autocratic one-party rule, which is the Communist Party in government for quite some time that has a stake and actually controls almost every entity, which was quite evident from what they did to Jack Ma of Alibaba when he tried to raise capital for expansion for his corporation. There are also fears of an economic meltdown in China after one of its largest real estate developers, Evergrande, filing for Chapter 15 bankruptcy a few weeks ago. There's also a political narrative against the Chinese government being spread by the mainstream media, which is affecting investor sentiment negatively. Therefore, I'll do my best to address some of these concerns and present to you the facts and figures free from any bias, which might be helpful for you to form your own opinion and decide whether you should be investing in China. A spoiler alert right at the outset though, I first wrote an article about PetroChina as an undervalued stock for seeking alpha for value investors. This is when the stock was trading at about 48 cents. This is for its edge shares, which was trading at about 48 cents, which was down 80% from its IPO price in 2007. PetroChina, like many others, had lost billions of dollars in market value because of the great financial crisis in 2007-2008. Warren Buffett, a billionaire investor and owner of Berkshire Hathaway, had also invested in PetroChina in 2003 and made a killing. Therefore, despite of losing billions of dollars in market value, and after reassessing its risk, I still feel PetroChina is still selling at a huge discount to its oil and gas reserves. And I obviously say that because the stock has recovered to quite an extent since I wrote that article in Jan, and it's already up by about 40% year to date, without including its dividend paid to this day. The total returns, as you can see, for the past 1 year are well over 80%. Therefore, this company has performed way better than its competitors from the same industry. However, the main difference between PetroChina and its competitors is that PetroChina is selling for 72 cents in the US. Therefore, after recovering from its earlier losses, PetroChina is back to being a trillion market cap energy company today in China in yuan or RMB terms. I'll definitely leave a link to my article if you are interested to read it. But let me tell you this, my thesis on PetroChina hasn't changed much since I wrote that article in January 2023. But before we dive into my analysis, I want to read out a little disclaimer for my viewers though. All what I discuss here in this video must not be viewed or construed as an endorsement or investment advice on PetroChina or any of the securities that I mentioned here. This video is for educational and informational purposes. Furthermore, I also want to disclose that I have invested in PetroChina and I do not intend to sell my position anytime soon. I also want to say that I have no business relationship with PetroChina or any other company that I mentioned here in this video, or paid in any way, directly or indirectly, to talk about their stock or security. The views are my own and they express my personal opinion based on my research. Therefore, Mehmood Investments or Mehmood Investment Research Inc. or any other third-party service providers, their officers or staff must not be held responsible or liable in any way, legally or otherwise, for any of the content or material that I share in this video. Investors looking to invest must conduct their own research and carry out their own due diligence before they invest in PetroChina or any other securities discussed in this video. There's a risk in investing in stocks and their prices are subject to fluctuations. and past performance is no guarantee of any future profits. Okay, so that was the end of the disclaimer. So back to my analysis on PetroChina. So let's begin. And also the company that I'm talking about is PetroChina, which has a ticker PCCYF, which is traded over the counter in the US, and it is not the parent company, which is China National Petroleum Company, or the CNPC, that owns and controls 80% of PetroChina. PetroChina, at a price of 72 cents, has a market value of $131.7 billion. So if you want to buy the whole business, that's the price you have to pay to buy all its H shares, which are traded on stock exchange. Now, the H shares of PetroChina are also traded on Hong Kong Stock Exchange, which has a ticker 00857. So for my analysis, I have taken all the figures from its audited financial statements and converted the amounts from RMB or yuan to US dollars. It's also important to note that PetroChina was also trading on New York Stock Exchange under ticker PTR for its American depository shares called ADS at a price of $47 for its 100 H shares, and the company has voluntarily delisted those shares. Now, some might argue that the company delisted its American depository shares from New York Stock Exchange because of its oil and gas trades with sanctioned countries like Russia and Iran. However, what I think, there's no substance to that argument, because the stock was trading at such a low price, it had no liquidity, which is why it made more sense for them to delist themselves from New York Stock Exchange, where they did not meet their listing criteria. So now when we look at PetroChina, it's one of the major oil and gas producers and distributors in China, which is heavily weighted towards upstream activities. So some of you may or may not know, upstream activities involve exploration, drilling, and extraction. As far as its capacity and production is concerned, in 2022, PetroChina produced more than 1.6 billion barrels of oil equivalent. It has more than 1.4 billion barrels of annual crude oil distillation capacity and has more than 22,000 gas stations in China. And it's important to know that the oil and gas production from all around the world is about 60 billion barrels of oil and gas equivalents annually. And because there are limited resources and unlimited drawdown of reserves and overconsumption, we face some serious shortages of oil and gas reserves, like the one we're facing today because of the wars. And this is one of the reasons why I think PetroChina, with large approved and developed reserves of oil and gas, is better positioned to gain from the situation today. So if you look at its performance for the last 1 year and make a comparison between June 2023 to June 2022, its revenues have grown by about 6.6%. And its net profit hasn't increased much, which has gone up by about 1%. And there's a reason for that. There has been some extraordinary / unusual charges. The company paid about $1.5 billion towards impairment costs after writing down and spinning off some of its non-performing assets as part of its restructuring plan. And the second reason is the government regulations regulating oil and gas industry, putting a price ceiling by the state of China. So as the sale volumes grew, so did the capital expenditure, which grew from 9.9 billion to 12.2 billion, representing 22.57% increase. When I look at PetroChina, it seems to be an efficient capital allocator when it comes to investments. There's an interesting part about PetroChina that I like. Its capital expenditure, while it has grown from 9.9 billion to 12.2 billion in June 2023, representing 22.57%, but not all that capital expenditure has gone towards the maintenance of oil and gas assets. A lot of it is actually invested in acquiring oil and gas reserves and making long-term investments in subsidiaries. So all this gets translated into higher returns for PetroChina, as we can see here. So when we look at the returns on these investments, 49.93% in 2022 and 36.5% in 2023 is quite substantial compared to industry norms. This is what makes PetroChina very attractive for value investors. Now, if you look at its free cash flows, it has obviously degrown from 9.6 billion to 5.6 billion in 2023. That is because the company is making huge investments in acquiring and replenishing its oil and gas reserves. Now, when we try to evaluate a company, we do the analysis of its financials for the last 10 years at least. So let's look at its financials starting from 2013. This is to look for the trends in financials. So when we look at the performance, again, we see that the revenue has actually increased from 189.7 billion in 2013 to 236.8 billion in 2022, which represents an increase of 24.77%. The net profit has actually degrown by about 5%. Now, this decrease in net profit is mainly because of the price ceiling that I mentioned earlier, wherein the government of China tries to restrict and put a limit on profit margins booked by oil and gas companies in China. I'll share more details about that in a later part of this video. So the capital expenditure also pretty much remains at the same level. So when we look at the free cash flow, it has grown by more than 100%, which is why it makes this stock so attractive to value investors. So as we know, the free cash flow is the lifeblood of a corporation. So is to an investor. So the investors actually love free cash flow when it's at these levels. So let's move on to retained earnings, which are equally important for investors because they invest for that surplus profit which gets accumulated there under that category. So it has grown from 101.8 billion to 128 billion, thus increasing by more than 25%. So it's pretty much in line with the revenue growth. It's pretty much in line with the free cash flow growth if compounded annually for the last 10 years. Now, since the net profits have remained flat, which is why we see the earnings per share also remaining flat, pretty much consistent with that. When we look at the balance sheet of PetroChina, while the free cash flows have grown to 53 billion in 2022, they still have about 10 billion of cash and cash equivalents. And the board, because of their phenomenal performance in 2023 thus far, has decided to pay an interim dividend of 3 cents per share, which is going to be paid on 30th of October this year. And the ex-dividend date, which means the last date to be eligible for that dividend, has already passed on 12th of September 2023. So PetroChina pays 3 cents twice a year, which is why it has a dividend yield of 8.33% at its current price of 72 cents. Now, if we look at PetroChina's oil and gas reserves, and if we are to come up with a future projection for the revenues based on these reserves, we come up with a very interesting conclusion. So for 2022, it has about 5,574 million barrels of oil. And if we take a very conservative price for oil, the current price for oil is $86. But even if we take 43, because that's the way you evaluate. So let's look at these figures and do the math. So the crude oil is trading at about $86 per barrel today, and PetroChina has about 5,574 million barrels of proven crude oil reserves in 2022. So this should give us $239.68 billion of revenue. Now, if we do the same for its natural gas reserves, by the end of 2022, it had about 41,508 billion cubic feet of proven natural gas reserves, which should give us a revenue of about $64.5 billion. So in total, we may expect a revenue of $304 billion, which is going to be 28.37% increase as compared to 2022 levels. So that's about revenues, but if we are to estimate the true worth of all the oil and gas reserves that the company had at the end of 2022, so the combined value for proved oil and gas reserves by the end of 2022 was 12,492, which is obviously oil equivalents combined. Then again, if you take a very conservative price of oil, which is $43, uh, and assume a life expectancy of 7 to 8 years for oil, and then 13 to 15 years for gas, and take all its free cash flows and discount them back at 10%, we would still get a value of 260 to 270 billion dollars. And if we divide that by its number of shares, we would still get a value of $1.44. So this is one of the reasons why the company is significantly undervalued compared to its oil and gas reserves. Now that's the fair value for its proven oil and gas reserves. But besides that, the group, now obviously PetroChina is part of the group, together they own and have access to 240.7 million acres of valuable land, which includes mines, and it also has 7,282 wells, which is quite significant. So if that is included, then obviously the price per share is going to be more than $1.44 per share. So those were the projections for its future revenues and cash flows based on its oil and gas assets. But if we are to find out its fair value based on its free cash flows, which have been generated already for the last 10 years, between 2013 to 2022, we get an average free cash flow of 12.5 billion, which is not bad. So these have grown at a compounded annual growth rate of about 25% and more, in fact. But we're going to be considering much lower, almost half of this growth rate, which is going to be applied to these free cash flows. That is because we have to be more conservative and more realistic, considering that the interest rates have been increasing over the last 1 year. Today, the interest rates in the US are somewhere between 5.5% to 6%. And when we look at the interest rates in China, because this is a company that's based in China, the interest rates are in fact much lower than the US. They are hovering somewhere between 3.5% to 4.5%. Now, this obviously is the benchmark prime lending rate. So, and in the US is the treasury rate, which is usually considered to be the safest investment without any risk. So this is the risk-free rate that is usually applied to these free cash flows. But I'm going to be applying a discount rate of 12% because that's my opportunity cost, considering all the uncertainty that's going around. So if I discount back all the free cash flows at 12%, then we get a fair value for PetroChina, which is $1.65. Now, this obviously is double of what the company is trading at, which is 72 cents for its H shares. So there's obviously 56% margin of safety with this, and the annual V yield, which we can expect, is going to be around 20%, which is not bad. This, despite being so conservative and more realistic, we get an actual discount of 129% if you are investing in this company. So the value for the whole business comes up to 301.9 billion, which is obviously double of its current market value, which is $131.7 billion. So this is what makes PetroChina as more attractive compared to its competitors or other oil and gas companies like Exxon or Shell or any other company for that matter, because PetroChina has a higher revenue as compared to those, although the profits are less. But then we're going to be discussing its profits as to why the profits are less compared to its competitors. So, and there is a reason for that. So I'll discuss that in a while. So one would argue that 12% discount rate is pretty high, almost double, more than double of what is being offered on treasuries, which is somewhere between 5.5% to 6%. Now, I don't think even the treasury rates should be considered as risk-free. That is because we have seen after what happened to Silicon Valley Bank with its proprietary book deposited in treasuries and then not being able to meet its obligations. So 12% discount rate seems to be more prudent in my opinion, which is why I've taken 12% as my opportunity cost. That is, if I have to invest and considering all the other risks, the country risk for China as compared to the US. So, and this is obviously for some of the investors who consider China as a high-risk country. When it comes to lending rates, China is much lower. The rates in China are much lower, so buying a house or buying a car is much more affordable as compared to the US. So when we look at some of the other metrics, for example, its liquidity ratio, it's less than 1, which is good. Which means the company is able to convert its inventory into cash in no time. Earnings per share, again, that's 10 cents, which is not bad. So the price to earnings is just about 7.42 times its earnings, which means you are buying this company at a much cheaper price. So if you buy this company, obviously you get $1 in profit every year. So the total book value for PetroChina is around 170.1 billion, and if we divide that by its number of shares, we get a book value of 92 cents, which is what makes PetroChina more attractive, because and that's one of the reasons why it's selling. When I say that it's selling for less than its oil and gas reserves. So let's look at some of the other valuation metrics for PetroChina. If you look at its capital structure to measure the degree of leverage, it has a debt to equity ratio of less than 1, which comes up to 0.23, which means the long-term debt is 23% of its total equity net worth. Which is quite good. And when we looked at its returns on its retained earnings, it comes up to 13.88%, which is also good. So the returns on total assets comes up to 6.65%, which is not bad at all. That is because PetroChina is a very capital intensive business with a huge base of fixed assets. So the normal return on asset for in any industry is around 2 to 4%, but in this case here it's 6.65%, which is pretty good. So when we look at its returns on net tangible assets, which means excluding all the intangibles such as goodwill, it has 6.9%, which is equally good. Metric, which is return on equity, it comes up to 10.44%, which is extremely good from investors' standpoint. That is because this is what the investors invest for in a company, and the return that you see here is what they usually expect for their investment. Another metric, which is return on invested capital, based on owner's earning. This is when we take the net income and add back all the depreciation and amortization, all the non-cash charges. we get a return of 5 to 6%, which is not bad. It's much more normalized and more realistic. I think it's extremely important that I make it clear that all these other valuation metrics are for year 2022. So let me highlight some of the risks for PetroChina. As I mentioned earlier, the government of China heavily regulates and controls oil and gas companies in China. They don't easily issue exploration and production licenses to companies. They also impose industry and product specific taxes and levies for environmental policies and safety standards. Now, I mentioned about the price limits imposed by the government of China as part of their regulations for oil and gas companies in China, which is why I strongly think that, which is why, in my opinion, the revenues and the profits for PetroChina are not really market based, not really reflective of its true value. So what the government does is it puts a limit of let's say 20%. So even if the prices of oil and gas are increased more than 20% internationally, the producers in China are not allowed to increase their prices by more than 20%. And if the prices fall, then there are no limits on the downside. So this is to make sure that the economy runs smoothly and the consumers are not affected by any increases in the prices of oil and gas. This is one of the reasons why you don't see high profit margins for PetroChina as compared to its competitors like Exxon. That is because it has limitations and the government does not allow these oil and gas companies to book high profit margins, even if the prices of oil and gas have risen to whatever extent. In my opinion, this is good for the consumers. So in this way, the government tries to control inflation in China, which is actually good for consumers because then it makes sure that the economy is running smoothly. In 2020, the government of China, in its central pricing catalog, actually made a commitment that it's going to be making some reforms by removing some of those restrictions to liberalize the price ceiling for oil and gas to make it more market-based, which is happening slowly and gradually, but it hasn't materialized to a fuller extent yet. Now, there's another risk for PetroChina, which is its concentration in the Daking oil region for oil production, which has matured over the years, and which is why its output has actually dropped by about 3.7% last year. This is one of the reasons why it's expanding and looking at offshore for acquisitions and expansion. Now, because of these offshore investments, PetroChina has been able to achieve $636 per ton on an average, which is the realized per ton price for crude oil in 2022. So this gives an average price of $86 per barrel, which is the current market price. And for natural gas, it's around $367.55 US dollars. But let me tell you this. So PetroChina has a lot of investments in places like Venezuela, Burma, Sudan, and Nigeria, where it has been able to achieve actually half of that price, which is around 318 per ton of crude oil, which is why it imports its crude oil at a much lower price, which obviously is a competitive edge for PetroChina. And this is why I say that there's a lot of value. This actually reduces its cost for all its imports of oil and gas in China for its consumption, which is what gives PetroChina a competitive edge over its competitors. Another reason why PetroChina is trading so low is because of corruption charges against one of its top executives, the vice chairman, Liao, who was involved in corruption, taking kickbacks amounting to $1.9 million. And he was charged for corruption and have been sentenced to jail for 15 years in 2019. So now I come to the last part of this video, addressing the risk for the country China. So first of all, China is not a communist country, but it's also not entirely a capitalist country like the US or any other Western countries. So China is growing at about 4.5% quarterly, which is the real GDP growth. And annually, it's expected to grow at about 3.4% versus 1.6% the real GDP growth for the US. So according to the recent data published in 2023, the GDP per capita, which is per person, for China is $12,732, whereas it's $59,484 for the US, which obviously is much higher. The current account surplus for China is $64 billion vis-a-vis $212 billion deficit for the US. Now, obviously, China is in a better position as compared to the US. Now, here are some of the interesting facts, and which might interest some of you who were concerned about China. So, here's the biggest difference between China and the US. So 60% of the total wealth of China is actually held by 10% of the ruling elite, which is basically the government, because the government owns most of the equities in their biggest corporations. Whereas 69% of the total wealth in the US is also held by the 10% of the corporate elite, but that is not with the government, it's in private hands, which makes all the difference. So the wealth distribution in both the countries, although asymmetrical, but there's a big difference. And I'll tell you why. So here's another interesting fact. The government debt for China is just about 21.5% of its GDP, whereas for the US, it's about 121% of its GDP. So the national debt of the US has just reached $31 trillion. And guess what? $1.1 trillion of that debt is actually owed to foreign countries like Japan, and $902 billion is actually owed to China. The rest is all public debt owed to mutual funds, pension funds, and other institutions by the government of the US. So most of the wealth in the US is actually owned by the owners of Tesla or Meta or Microsoft. That's one of the biggest difference, whereas in China it's owned by the government, which controls, regulates to make sure that the Chinese citizens are comfortable and actually have a better standard of living, and they don't have to worry about high interest rates or rate of inflation as opposed to the situation in the US. So when China was creating its wealth, that started in the 1970s after the globalization, the income for the bottom 50% of the Chinese citizens actually increased from 27% to 41% by 2015. So that's one of the biggest difference. Whereas in the US, the income for low to mid level employees has actually gone down. So to conclude, here's my 2 cents on China as a country and PetroChina as a company. China is obviously different than the US. In the US, most of the wealth is actually concentrated in just a few private hands who actually control the economy and the government. But in China, you have the government that actually controls the economy, putting all these restrictions and most of these big corporations, not allowing them to exploit the low to mid class. In the US, most of the wealth is actually concentrated in just few private hands who actually exploit the low to mid class. While in China, you have more than 60% of the wealth in the hands of the government that actually decides what's best for their citizens. Now, you decide where you prefer to be. Now, obviously, that comes at a cost where you are not allowed these civil liberties because of lack of democracy in China, whereas in the US you have all these rights and freedoms. So both the countries have its own pros and cons. No one country is better than the other. Now, if you're a value investor, you obviously know where to look for cheaper valuations. Now, we looked at PetroChina, which obviously had much lower valuations, trading at less than its book value, which is expected to grow with less likelihood for the company to go bankrupt. That is because you have the government as one of the major stakeholders, which would come to its rescue and inject the capital as and when required, which obviously reduces your risk for your investment, if you think about it. So thanks for listening to me, and I hope you get some value from this video.